Hello everyone, this is Andrew McNair with SWAN Capital's special quarterly October market recap. In this month's video, we will be focusing on major events in the third quarter and looking ahead at some of the challenges facing markets in the fourth quarter that you need to know about. Now, as always, please be sure to review the following disclosure statements after this video is completed. Now, as you already may know, volatility was really the name of the game during the third quarter this year, as markets were pummeled by Fed fears, a conflict in Syria, and budgetary debates in Washington. Now, despite all of this volatility and everything that's going on in the world, markets still turn out a solid performance. We saw two major indices, the Dow Jones Industrial and the S&P 500 reached new highs in mid-September. Now, for the quarter, the S&P 500 gained 4%, the Dow gained 9%, and the NASDAQ gained 9.25%. Fantastic, despite all this volatility. Now, on the economic side of things, we had a reasonably decent quarter. Major indicators show that the economy is still growing, but at a modest pace. Estimates of third quarter GDP, gross domestic product, were revised downward slightly, though we're still expecting to see Q3 growth above 2%. Now, on the other hand, second quarter GDP growth was revised upward to 2.5% due to unexpected increases in exports. So that's good news. Now, despite some worries about rising mortgage rates, the housing market is still doing well. Home prices are up across the nation and home sales are growing. The inventory is still shrinking. The labor market continues to improve as well. Now, while overall unemployment rate has dropped to 7.3%, hiring remains below healthy levels, and people are still dropping out of the job hunt discouraged, meaning there's still a ways to go. Now, on the negative side, consumer sentiment dropped in September to a 5-month low due to the consumer worries about high interest rates and all the drama that's occurring in Washington. Now, you may be thinking, with all these headwinds facing the market in the next few months, it might look like there's no way for this rally to continue. Well, we don't think that's necessarily the case, and we actually see significant potential for upside potential in the fourth quarter. And here's why. The fundamentals are still there. Long-term economic trends are still positive. Hiring is improving. Business spending continues to grow and has room to grow. And economists estimate that third quarter and fourth quarter GDP growth at 2.2% and 2.3% respectively is a good sign. The housing market also remains a major contributor to economic growth, even with these interest rates. Now, the global economy is improving. Trends in China and Europe suggest that our largest trading partners are pulling out of their doldrums, and we can hope that this global demand for U.S. goods continues to pick up. Now, we can also hope that the third quarter earnings season provides us with some positive surprises. Now, it's impossible to predict which way markets will move with any certainty. And we always recommend focusing more on the long-term financial objectives instead of the short-term market movements. And it's probably no surprise that we can expect more volatility in the fourth quarter. However, one of the benefits of volatility is that this often presents opportunities for flexible investors to take this into consideration and make some profits. And that's what we're going to look for some opportunities for our clients. Now, here are some upcoming events here at the SWAN Capital community. We have our What Your Money Would Say radio show airing this Saturday, 12:30 to 1 o'clock. And we're going to talk about a key investment, IRAs. There's lots of nuances in the IRA tax code that you need to be aware of. Now, I hope you found this commentary informative and helpful. If you have any questions, feel free to call our office at 850-380-9558. That's 850-380-9558, and we'd be happy to talk with you.